Hello, everyone, and welcome to the BBA Show. I'm Adam Wyatt, aka AKW Analytics, and I'm here as always with Rich. How you doing, Rich?
Man, doing great. Had a little break. I heard you had a little break too, seeing some fish action.
Oh man, yeah, a little jaunt up to the Northeast to Philadelphia, your neck of the woods, and then up to upstate New York to see 5 shows. Man, it was great. Had a
Oh,
blast. Just saw old friends and made new friends. It was good.
nice. Feel a little refreshed. Feeling good.
Feeling refreshed, feeling good. It's still midsummer though, as far as Bitcoin goes, things are pretty dead.
Dead. Yep.
Yeah,
Flat.
I mean, yeah, pretty flat. I mean, I would venture to say that that's probably a good thing
Mm-hmm.
post halving. I mean, just to instill a little stability and confidence in the market after that pretty jarring economic event. Hash rates looks good. Difficulty actually went up a tad on that last adjustment. Price is stable around 666. Oddly enough, of course, we get another
Nice.
weird number, 420, 666.
Yeah.
One of these market makers has a sense of humor, but
Yeah. It's
anyway,
a product of this community, I think.
yeah, definitely. So no, but technically, things look pretty good. I'm going to share my screen here, and we'll just pull up a 12-hour chart of Bitcoin, which we've been showing in the reports recently, and you can see the big run up was nice going into the halving. We haven't pulled back nearly as much as some people thought post halving. I think a lot of traders thought we might dump back into the 3,400s. That didn't happen. So again, we've kind of done another one of these triangle pennants. Makes this last one look like nothing, but it might have been another one of the things. And right around when I don't usually put the Bollinger Bands on here, but right around when these Bollinger Bands start constricting, like this, getting pretty tight. We're probably not there yet. We're probably in this kind of one of these red areas here.
Right.
But I mean, these tighten up for another week or two, and we're going to get ready for a move. So we're just kind of prepping for that. But for now, get used to 660 to 670 because it looks like we'll be here for a little bit longer.
Yeah. Chop around here a little bit. Yeah. It's interesting. Those Bollinger Bands. I think it was actually John Bollinger, the originator of this, particular analytic tool. He tweeted last time, right? What didn't he tweet during the big pennant or big triangle that the Bollinger Bands were just getting so tight and it was ready to pop, and sure enough, it did. So it'd be interesting to watch that over the next, I don't know, a couple weeks, few weeks, maybe a month or so.
Yeah, that was in here. I mean, it's a little sloppy with all these MAs
Yeah,
on the 3 day on Crypto Watch, but you can see we had that top, and then we just tightened up. I mean, it was right around in here. Look how pinned that was.
yeah,
And on this 3 day, you can see we're still pretty wide here. So,
right, right.
yeah, yikes. It could be November before we break out here. But again, I think that will show some maturity for Bitcoin, especially what I think is going to be a more volatile period for legacy markets going to the end of the year. So
Yeah, absolutely.
I think that Bitcoin looks good. And yeah, Bollinger, by the way, yeah, he's following Bitcoin. He's following a couple of Bitcoin traders now, so I think he's keeping an eye on the market. It's another good sign that when a classic TA like that starts getting interested in the market like this, it means there's some interest
Oh
and some
yeah.
liquidity there.
Oh, definitely. Yeah, guys like he and Peter Brandt, following it pretty closely, just keeping an eye on the markets and trading when there's obvious moves like that last one. I mean, even that is a good sign. I agree.
Yeah, so you get those guys, and you get the more fundamental guys like Raul Paul in there.
Yeah. Yep.
Those smart guys on both sides of the analytics start looking at something. Everybody should. So anyway, yeah, Bitcoin's pretty good right now. I don't think there's too much to talk about SegWit and all that. As far as I understand, there's code being rolled out constantly and tested and stuff. It doesn't get announced or anything, but it's happening as we speak. So
Yeah.
good on the core devs there.
Do you think we'll see maybe a resurgence of the altcoin market, or maybe there's some traders looking to accumulate more Bitcoins before the next move?
Yeah, I do. But at this point in the, if we go back and use history as an example, let's say this last consolidation period in the spring, by this point in in the pennant, in the triangle, alts had already kind of been taken off. I mean, you had a lot of volatility, you had a lot of action, and a lot of them Factum, Made Safe, Ether, all these were really going. And now, I don't know, there's just not a lot of movement in any of these, to be quite honest. You know, some of them will move for a week, they'll go up, you know, 50, 60% or something, and they'll come back down. But I don't know, for some reason, there's just doesn't seem to be as much capital flowing into the alts this time. Now, I think, I don't know, maybe there's more discerning money, maybe valuations are more fair now that Bitcoin's higher, you know, everything's on a dollar basis now, might be fairly valued, so to speak. But you know, I hope so, because we're involved in alts too. But I want to see some volatility pick up.
Yeah, sure. Yeah, that's just an interesting thought. It'd be interesting to keep an eye on those markets to see if maybe there's a little profit to be made before this next leg up in Bitcoin.
Yeah, in the small cap stuff, there's always kind of churning. You know, there's always different coins popping up out of nowhere after long accumulation phases that nobody's really heard of.
Right.
But the big boys that most people know and trade just aren't really moving that much. So, you know, at this point, we got to kind of sit on our laurels. But that doesn't mean that there's not other kinds of action in the altcoin markets. I mean, so
for sure.
We just talked a second ago about Ethereum and the hard fork. So the DAO, I'm sure everybody knows by now, there's this DAO hack, and so the hard fork essentially refunds or reverses that hack, and then we have this other chain now after the hard fork called Ethereum Classic that's also kind of trading OTC, but it's the old chain essentially with the quote unquote flaw in it, with the DAO hack still in it, and the attacker on that chain still owns those coins, and they still do have some small value. So you know, this is a great thing for Bitcoin, in my opinion, because it's going to show people what would have or what could happen with one of these hard forks, like what would happen with Bitcoin Classic. You know, what that means for the economics of this whole thing. So I think it's really good for Bitcoin. But I think it's going to be, you know, it's going to be very interesting to see how these two chains compete now. I mean, what do you think?
Yeah, I agree. I mean, there's so many things I could say about this. I feel pretty like outraged at the fact that these guys are so outspoken right now, talking about how this hard fork was a success. I mean, yeah, it happened and it didn't blow up immediately. So, I mean, I guess you could call that a success, but I mean, that was hours after it happened, and there's so much left to be unwound about this, right? There's all the economic fallout that could happen. Like you said, two competing chains. And then not to mention just the problems with immutability. And, you know, I know Vitalik has come out and said, well, you know, we'll do it just this once, but, you know, in the future, I don't know if we'll do it again. Well, I mean, you've already set the precedent, and you're going to get all this pressure from the market if it happens again. So, yeah, I mean, I think it's a little late for that. It's like the parent saying, you know, if you don't go to bed, we're not getting ice cream tomorrow. The kid doesn't go to bed. Then the next day they get ice cream anyway. Well, you just set like a precedent, right? Like that is going to continue to happen, and to unwind that, to roll that back, that behavior back, it's so much more difficult than to just not do it in the first place. You know what I mean?
I agree. And if kind of on a lighter note, Loomdart on Twitter not long ago, I saw, he said, "I wish I could roll back getting herpes," which I think makes a great point. I mean, some stuff in life, you know, is just irreversible.
Yes.
Right. You just got to deal with it. And, you know, I get the short-term thinking, and, you know, there's a lot of lawyers that seem to be on the side of Ethereum for some reason. But I mean, if we're talking about money, you know, we can talk about code and contracts and law and all that.
Yeah.
But if we're talking about money, this can't be allowed to happen.
No.
Right. Fungibility wise, like I said, immutability, irreversibility. And this also goes to, you know, how finite is this thing? With tons of these competing chains with all these competing interests, and I don't know. economically speaking, from a monetary perspective, that this doesn't seem to be feasible. So they seem to be in a quandary. But if kind of the point of my whole point of this is just on a speculation, being market players, buying the Ethereum Classic might be the better play here. What I've seen on OTC, like 5,000 to 10,000 per Bitcoin is the going rate. You can negotiate. That's pretty cheap. And in my opinion, if either chain succeeds, I think the probability is probably neither does long term. Something like this is again strapped onto Bitcoin. But if Ethereum does succeed, Classic would be the one that I would want to buy from a money perspective. And if you're getting them this cheap, boy, that could be the trade of a lifetime. So I'm not saying everybody go run and do it. In fact, I shouldn't say anything until I go buy some. But it's worth looking into. Yeah,
for sure. I mean, the risk reward, right? I could see a scenario where the chain that's being used now, the ETH chain,
HF, right?
Yeah, the hard fork chain. Let's say this one deflates hard, like just all the air comes out of it, and
it's like hashing power, really, right? Because right now, like 99% is on that fork, right? But that doesn't have to always be.
Even that is suspect, Adam. I'm from my understanding, the 99, like they're only counting votes with the people who voted. It's so weird. It's so weird. So even that, like that 99% figure is suspect to me. But so that aside, yeah, let's say the chain has the majority now deflates, and maybe it's market pressure, maybe there's a bug found in the hard fork and it starts to blow up, then they have to switch back to Ethereum Classic. I mean, the return on that could be really great, even though the longevity of it will probably not be there. At least in the short term. Yeah, it's a great play, I think. I mean, not that I'm recommending it by any means, but if you like high risk, high return, that might be a good play. I agree.
Right, and so we both agree on that. But don't you also think this is such a great example of why forking Bitcoin is such a bad idea, even with quote unquote consensus? I mean, so I think it was something like 95, 99% of something. Consensus was the hard fork in Ethereum, and we're still now we're having these two different coins. They're going to compete. Bitcoin Classic was going for a 75% threshold, and they expected nothing to happen. I mean, that's looking so back now, that is a complete joke, obviously now. But
which no one wants to acknowledge that, right? No one. I don't hear Gavin, what's his name?
Andreessen.
Yeah, thank you. Sorry. I don't hear Gavin Andreessen bringing up that point. I just hear him heralding, really like just peddling a bunch of BS, man. It's just propaganda. It drives me so insane.
Nobody's listening to those guys anymore, I don't think.
Yeah, that's true.
Nobody that I know that has a voice in the Bitcoin community really listens to that crew anymore. So.
Yeah, absolutely true. It just blows my mind when people can't acknowledge reality. There's another point so Tour de Meister was on Real Vision recently. He brought up a really, really great argument on why Ethereum is kind of their future's grim. So I'll just run through it real quick because it was so good that it just really stuck with me and memorized it. So basically, when you're building a network, whatever is the network, you have essentially 5 points of trade-off. And those 5 points are, let's see if I can name them off memory. So cost, speed, scalability, security, and flexibility. Okay? And where Bitcoin focused solely on security at the expense of everything else, right? Like, you can make great arguments against, costs, speed, scalability, and flexibility for the sake of security. So where Bitcoin focused solely on security, Ethereum focused on flexibility, right? Solidity is a programming language that's supposed to be flexible, whereas Bitcoin's programming language is very rigid. It's very concrete, right? So if we're building a house, his analogy was if we're building a house, and you build a house out of brick, there's not a lot of risk there for, failure or being, burn up or something like that. Whereas if you build a house out of straw, something that's flexible, but something and malleable, but, not sturdy, is it any shock that we're at a risk for burning up and blowing up? Right.
Yeah.
And so all of these, now we've seen the loopholes and the vulnerabilities of this flexible computing language, and that, I mean, how can we even think of a world where we build a financial system based on something so vulnerable like that?
Yeah,
right?
and I think isn't that like the technical term that they call it Turing complete? Isn't that the term for this kind of flexibility?
Yes.
Yeah, and so I didn't really understand what that even meant before I asked my business partner, who's more of a technical guy, and he was like, "Oh, yeah." He explained it to me. I was like, "Well, that's for a currency. That sounds like a bad thing." I was like, "I don't know if I would be using that as a marketing bullet point, so necessarily
exactly.
because that's not what you want in a money." And he's like, "Yeah, I agree." So. Yeah, I understand. I think that's a great analogy too.
Yeah. And so it really stuck with me. I mean, that to me, Bitcoin is that it's so rigid and it's so, not malleable and not flexible, but that's the beauty of it, because then we can build protocol layers on top of this underlying protocol that focuses solely on security. And if security is tight and if security is, secure, then we don't have to worry. Like, these guys, and he brought up other arguments. If you have access to this, to that interview, anybody who's listening, I'd really encourage you to check it out. It's really great. He makes some great arguments against Ethereum. So anyway, I just wanted to touch on that. I thought that was a really great point, those 5 trade-offs and the comparing Bitcoin to Ethereum.
Yeah, and I think one of the beauties of software is that that you can create almost an infinite amount of layers, like this huge stack of layers on top of just a base kind of concrete foundational protocol that does everything that anybody would ever want it to do, right? So it's fully extensible in that sense.
Right.
Software, so you don't really need it. You don't really need something that's even more complicated than something already needs to be, and then try to build on top of that too. I think that's just an unnecessary step.
Yeah, absolutely. And I mean, again, this is, to me, Ethereum is the hard and fast way of getting what Bitcoin will eventually get to, which is, having a smart contract platform, which, there are arguments to be made that smart contracts aren't as efficient as the whole community, Ethereum community and marketing team are making it out to be. But even that aside, they pressed into the future before we even got finished with the present. So I mean, I'll gladly take responsibility for being wrong if I'm wrong in the future, but for now I'm sticking with Bitcoin.
Yeah, and I mean, this kind of goes, the root of all this really is what do you need a blockchain for, right? Like this picture that's been going around Twitter recently, where it's kind of a flow chart of what you if it's this and this, do you need Bitcoin, yes or no? And I mean, there's only one situation where you really need a blockchain. So I mean, all this kind of comes down to that. What do we need a blockchain for? Well, we really only need it for what Bitcoin's doing. So at that point, it's kind of, have fun. Again, this is great test net stuff, like seeing what's happening with this hard fork in Ethereum with the economic incentives. That's important for Bitcoin, but Bitcoin doesn't have to do anything but watch.
Yeah, exactly.
So anyway, I've been away, and summertime. So I've been kind of, and BBA has been a little bit crazy. So I've been focused on some other things. So can you catch us up to date with some of the legacy market stuff? I know forex has been a little bit calmer than a month or two ago with Brexit. Stuff is a little bit, it's summer trade again. So I mean, stuff's not going to be as crazy. It tends to not be as crazy in July. But what's going on with the yen and China and the dollar?
Yeah. There's a lot to talk about, but I'll try not to be too long-winded.
Yeah, sure.
Just before I get into like the forex charts, which I'll probably focus mainly on forex today,
Yeah.
but just want to comment on the fact that like it's a really strange world we're in, where we're hitting all-time highs in the stock market and all-time lows in the bond market, and at some point, I think one will be revealed to be the right path.
Sure.
And I've heard arguments for both sides, that we can push higher in the stock market and that it's the bond market that's wrong. But if you look at history, the bond market is typically the one that's right. And I mean, I don't make conclusions or opinions just solely based on what happened in history, because that tends to lead to blow up. But it's just an important thing to think about.
Sure.
When we're hitting, treasuries hit, I think like 1.38% yield, which is that's ridiculous. And I'm talking about U.S. treasuries.
Yeah, I was gonna say like way more than half the world is negative. Like
yeah, exactly.
Firmly negative. So
I think it's like 60% of
yeah.
bonds are yielding negative right now. So it's an interesting point. I posted this in the Slack today. Alex Gurevich, he's a brilliant guy. He's a Russian mathematician. He used to be a professional poker player, and now he's a trader. And he was talking about how he made two assumptions. The first assumption was that if ZERP and NERP, zero and negative interest rates, are perpetual, which, that's an assumption, and there's an argument to be made that could be the case. How are we going to come off this lower bound if there's no, the longer we stay negative, the harder it will be to come off this lower bound. So his assumption was, if we stay perpetually at negative and zero, and if gold continues to be a currency, then cash's yield will converge to zero, and gold relative to whatever cash we're measuring it against will converge toward infinity. Right? So does that make sense? So as long as we're at 0% or lower, we should see gold eventually, we should see the value of that currency go to zero, and the value of gold to approach infinity.
Yeah, the hyperinflation scenario.
Yeah, exactly.
Right.
Exactly.
Yeah. Okay.
So,
right.
And the whole argument was like, well, everyone in the asset management world heralds cash as a safe investment, but is it that safe when you look at it in a world like we're in today? Right? Can it really be that? Go ahead.
It is overnight. It is
overnight.
Right. So if you're a bank and you need to hold reserves or funds in reserve, holding cash is the safest thing you can do. But outside of that, no. Over medium to long term, that's horrible.
Yeah, exactly. So, and maybe he had a great blog post too. I'd encourage everyone to read it. Maybe we can put it in the show notes after the show. I'd love for people to give it a look. He deserves some visibility anyway. The guy's a genius.
Nice. Yeah, so you've mentioned him multiple times, and I'm pretty sure I follow him on Twitter.
Yeah, cool. Well, so just wanted to touch on that. Just the kind of crazy upside down world we're in, where we see all-time highs in stocks, all-time lows in the bond market.
I agree. Although I will say, as a technical analyst, when the stock market broke that 2030 level, and then there was a continuation the next day, it was off to the races. So I mean, if you're thinking about getting short this market, I would think twice. There's no topping pattern. I mean, this thing could go high with central banks pumping the hell out of it.
Yep, exactly. And see, this was Julian Brigden. He was on Real Vision recently, and his presentation was on why the bond market is wrong and how we could push another. He's expecting another maybe 10 to, well, not expecting, but he would hypothesize, if the stock market is right and the bond market is wrong, then we could push another 10 to 15%. Now, in the past, it's pushed way more than that, like 200%. But he was very assuring of the fact that he doesn't think that we'd go that high. But 10 to 15% higher is within the realm of possibility before we have a correction. But the problem is we keep having all types of intervention, and I don't just mean like asset buying or quantitative easing. I mean just verbal intervention, from Yellen, just being generally dovish off every little economic figure that comes out, to people like Kuroda and Abe threatening to purchase more assets to increase their QE program, and Draghi getting ready to pull out all the stops. So I mean
yeah, but I think I agree, but the correction coming is going to be like the last one, in my opinion. I know. So
yeah,
I think we're in the blow off phase. So this could be a 10-year bull market. We're in the last 2 years of it right now, maybe the beginning of the last 2 years. But that maybe we have another 10-20% to the upside. But the correction that comes after this kind of excess is fatal.
yes.
It's generationally destructive. So
I agree.
you have to prepare
Absolutely.
now.
Yeah, and we've talked about pension funds and the threats that are ahead with pension funds, but also look at, like we were just talking about with cash, people like Mark Yusko who are holding cash because they don't feel good about the market. Maybe they don't think that there is about to be a massive correction right now, but they just feel too uneasy about it. But if we continue to hold cash in a NERP and ZERP world, this is where this is why I brought this up. These people are holding cash thinking that they're just laying on the sidelines, but there's a certain negative yield to cash that comes with just holding it and waiting too.
Yeah.
So where do you put your money these days? And gold and Bitcoin, it's where I'm at. But
those don't yield anything anyway. I mean, either,
right.
But they are naturally deflationary. So you have
Right.
at least you have the economics on your side, if nothing else.
Yes, exactly. So you can you'd be in good shape if things do kind of fall apart. And I think it's always good to be prepared for like a go to hell plan, if things really just fall apart, to have some part of your portfolio prepared for that.
I call it everybody should have a get the hell out of town bag, right? So whatever you need to get the hell out of town in 24 hours, everybody should have that bag prepared, whatever you need in it.
Absolutely. I 100%. And people, they want to call you paranoid or crazy, but man, they can call
Only
you
the paranoid survive.
Exactly, man. Exactly. Oh, and Nassim Taleb would be so happy right now to hear us talk about it.
All right, cool, good. All right, well, we're
sorry,
on the same wavelength for stock market, so there's more upside potentially in this divergence. The bonds can continue, but it's gonna mean revert at some point. But we're gonna kind of real quick. Let's not too quick, but let's touch on some forex stuff, and then we can wrap up.
Yep, sounds good. Let me just share my screen. I just got like 4 charts I want to show.
Cool.
Let's see. All right, can you see what I'm looking at here?
There we go. Nice, yeah.
All right, cool. So, all right, this is DXY. I like infinitely talk about the dollar to the point where I can't talk anymore. But it's always important to give it a look. Let's check it out. So we've had this downtrend channel for the past, I don't know, 6 to 8 months. We hit a top, and then now we hit a downtrend, and it really set up nicely. And people were, claiming that, okay, this is the downtrend that sort of leads us back down to these lows down here in the 75 to 80 range. But just recently, with the Brexit, the Chinese yuan has slowly been creeping back up. We've seen this break through that trend. So we broke through the top of this trend line. And now I think we're going to be in a consolidation period off this little higher trend here.
Yeah.
Where we could kind of float around here for, I don't know, another few months, even a year, who knows. But so long as we stay in this range, there's going to be opportunities, to get positioned for the next move up. Okay, so.
Yeah, and then so if you, real quick, I have a comment. So if you zoom out there back to that kind of where you can see the uptrend, you can see that, what we talk about in the report and what, good traders and educators like ICT have talked about for a while is range expansion and range contraction. And so you had multi-years of range expansion to the upside. I mean, the range just kept expanding to the upside. They just kept pushing new highs and new highs, all in here like a year. And then now we're in a range contraction to where, it's pinned between two levels, essentially, to
Yeah.
where this range is going to tighten and it's going to consolidate and it's going to wash out traders until we get the next expansionary period, whether that's upside or downside. But so,
Right.
yeah, people should just know we're just in a range contraction consolidation period right now. So it's just, you're going to have to trade within the range, right?
Yep, exactly. And the way to do this is to just know that, all right, well, look at the weighting of this. The DXY is a basket of currencies that the dollar is measured against, with the euro being the most heavily weighted, I think at like 30% or 33% or something like that. So you can imagine that since we're in a consolidation period with the dollar, the euro is looking sort of like the inverse to this chart, right? It'll be down with a consolidation. And actually, just to check it out, so that's actually what it looks like. Check it out. I mean, we're down period, we're in a consolidation. So, I don't think it's a bad idea to, if we could get to the top of this range. I don't know if that's possible at this juncture, but if we get lucky and we can get up to the top of this range, I think it'd be a great time to get short, in my opinion, because I think the fundamentals tell me the dollar is going to push higher at some point based on that, as I say all the time, the $10.5 trillion carry trade that's out there, the short dollars. So, if we can get back to the top, I think it's a great time to get short euro.
I agree.
But, it might be tough to get there, especially with the way the world is right now. I know Abe, was it? No, Kuroda. Kuroda was talking about expanding the QE program in Japan. And they were going to...
They're the same guy. It's the same person. They've got us fooled. Kuroda, Abe, QE, that's all that, they all sound the same to me.
Yep, exactly. That's good. Oh, man. So, yeah, well, so let me clarify. He didn't come out and say this. There was a rumor that they were going to be adding to the quantitative easing program by increasing the amount of assets they were purchasing, as well as implementing a fiscal type stimulus, which, just a quick side note, the fiscal stimulus, in my opinion, would at least give them a short-term edge on growth. It also would kick in inflation probably massively at this point based on the amount of money they printed. But so that aside, if they're talking about expanding this QE program, then you would think, okay, yen inflation, right? We should see a weaker yen, stronger dollar relative. So let's look at that chart. So I'll be in the high time frame here. This is a daily chart. You see this big run up, which is the dollar. When the dollar climbed over the last 2 years, we formed a top here. And over the past, looks like, I don't know, since January, we've been in a downtrend, and it's formed a pretty nice channel. I mean, we've broken out of it a little bit, but the candles keep closing within that channel. And so I noticed this, and look down here. Can you see what I'm looking at?
Yeah.
Right here, you see how these green candles, they just almost stacked right on top of each other, back to the top of this trend.
Yeah.
This was, I think, the market positioning for the like a setup for the increase in the QE program, right?
Yeah.
Sort of buy the rumor, sell the news situation, in my opinion. So what I'm looking at is, I got into a trade right here at the top of this channel, and I'm anticipating actually the market to be let down, because even though they've been pretty open about their negative interest rates and QE, he's also been pretty staunchly opposed to increasing it anymore. And only when this level gets down to like the 100 to high 90s area has he threatened to increase it. Let me see if I can move it over here. Yeah. So actually, I hate zooming out this far, but so it would be great if we could get down in this green box overall, because I think that this is the OTE off these low moves here, from the low to the very high. If we could get there, I would say go long USD till infinitely forever. But I don't know that we get there.
No, I mean, from a technical perspective, I'd tell you we don't get there. I mean, maybe not for years. Look at it. I mean, this is almost perfect. You can see this downtrend channel. They went down from a market maker's perspective, that spike candle down to
Yep.
100 or down right down to below, do they access liquidity there? A massive pool of liquidity right below 100.
Yep.
And now they're going to rally that thing all the way back up to 110, 120. I almost guarantee it.
See, I disagree. I think only if they come out in support of increasing the QE program, do we see this rush up to, like you said, to 110 to wash out stops.
Yeah, but remember, I mean, Rich, see, here's where, you know, from a BBA and from an analyst perspective, I'll argue with you that that's what the TA is telling all the story. Like, so you don't need to read anything further into the fundamentals, right? The technicals are telling you that, in my opinion, like, you know, maybe not obvious right now, but that the fundamentals aren't what matters in this market. What matters is the market makers making the market and accessing liquidity, right? So, I mean, if you have this multi-month downtrend in what should be a long-term fundamentally strong market, and then a spike low like that, you know, I just think, if nothing else, a retrace up to like 110, 112. I mean, if you're the market maker again and you just hit a huge pool of liquidity down below 100, why would you settle for this? Why not break it out?
Right, but the reason I'm arguing that it will come back down only if they don't increase the asset purchasing program is because the market was positioning long here, right? So they're still going to be positioned long off these lows as a way to anticipate there being further easing and further opportunity to capture profit that, you know, their thought is that we break out of this trend and push upward, right? Because of yen inflating because they're increasing the asset program. So I understand what you mean, and yeah, like with a huge candle like that, I mean, yeah, they did access a lot of liquidity, but they could also access a lot more going back down on the backs of people who are anticipating us going further. I think that's where the market is positioned right now. I think it was like 85% of people who are, you know, trading this market believe that we're going to push higher.
Well, you know, then that means I would expect it to come down and double bottom then there around that $100 level. So I mean, access to the liquidity at the bottom of the channel, and then you break out with just one more leg to the downside would do it, perhaps. But I mean, look at the break in market structure. This is the most important thing to me, really. All the way up until this bounce here, you've had lower lows and lower highs all the way down the channel, right? The whole time. There hasn't been a higher high until boom. Recently, you've hit this high of this channel, and it took out that local high, the last local high before the low. Yeah. That spot. See, so I mean, that's a break in market structure to me. That tells me that the market makers have something else in store for this market. Again, it could be 6 months, but
Sure.
Yeah, and again, fighting the trend is hard, but you know, technically speaking, boy, I would tread lightly in that market. It looks like danger.
Yeah, well, I just moved my stops to break even just in case. So either way, I'm treading lightly on this because I have no idea what the announcement's going to be. Is it going to be more? Is it going to be less? And that to me, I paid a lot of attention to, because you get a lot of, even if it's not, it wouldn't just be market makers. It would be like a lot of even retail traders, which in the aggregate can add up to a lot. You know, trading that market toward, you know, shorting yen, longing dollar there. So anyway, I got in at the top, right where it broke that market.
Nice.
What you're talking about.
Yeah.
And so
nice. As a short,
Yeah, as a short. I'm going to try to short, like you said. At least I've got my target for 100. Actually, I may move that up a bit just in case. But
one at 102 maybe.
Yeah, exactly. I was thinking like 102, 101.8, something like that. But yeah, so I did move my stop to break even. But you're right. Like it's something you have to pay attention to as market makers. And you're right with this breaking the market structure here. I hadn't previously thought, you know, okay, what might be in store from that? Because I don't give too much credence to candles unless they close over that market. Do you see what I'm saying? Over the trend.
Yeah, absolutely. But you know, just you have to kind of put the candles in the context of of the whole market of what it's looking like. So if you're a guy, let's just say, I just say a guy, but an institution, and you got in a short up at the top of the trend,
Yeah.
And now for months you've been riding this short, and then you close out near the bottom, and then you access this huge pool of liquidity down to get long that watches stops that are 6 to 8 months old. Again, that guy is not going to settle for this rally. It's just he's looking for. He just made was it 20-30% on the downside. I mean, he's not going to settle for 3 to 5% back on the upside. In my opinion, I wouldn't.
Yeah, no, that's
make it worth my time.
Absolutely.
That's all I'm saying. Just put yourself in the mind of somebody who's making a lot of money in this market and wants to do everything he can to make more.
Yeah, no, you're absolutely right. So I'll be keeping a close eye on that. Maybe we can do an update on it next time we talk, because I think by that point we'll have a pretty solid move one way or the other. Especially based, I think the announcement comes next week whether they're going to increase or stay where they are. So yeah, maybe we can check in, because I'd love to revisit that.
Yeah, for sure. Cool.
Just last thing, and it's real quick. I just wanted to point out, after the Brexit, we had the euro against the pound surged. I mean, that huge candle right there, and it hit a top here. I'm pretty sure. Well, in my opinion, we come back down. I think the pound can strengthen relative to the euro, especially given that we've talked about the European banks so much. I think the European economy is in pretty dire straits, and I think eventually they're going to ramp up their easing program, and I could see the pound strengthening from here. So just something to keep an eye on. I don't have a trade in mind. I don't have any levels, but I'm just thinking, again, fundamentally what we could see, and I think pound has a good shot to strengthen from here against the euro.
Yeah, fundamentally speaking, I agree. I like the pound. But if you can you zoom in a little bit just on that top?
Oh yeah, sure.
And you can almost see classic topping market structure. I mean, you have a kind of a spike top on volume, and then a retrace, and then a bull trap on lower volume, and now you're kind of just bouncing.
Yeah.
Down below the lows. I mean, and that down below the highs. I mean, that just spells retrace to me.
Yeah. That's good.
Look at that. That's like an Eiffel Tower pattern right there. That's brutal.
I've never even heard of that. Is that like a straight up, straight down kind of pattern?
Yes. Yeah. Like that's what it look. Yeah. Or a castle is another kind of.
Oh, okay.
One of those. But yeah, just you can see it looks like just a big top of a building.
Yeah. Right.
Or a church or something.
Yeah, so I'm gonna keep an eye on that as well. I don't know if I'll trade it yet, because I haven't given it enough thought or examination to put on a trade, but that's just something I'm keeping an eye on.
Well, that looks like, I would, of all the ones we've looked at, technically that's, if you were to force me to make a trade, I'd be like, get short that one.
All right, noted.
Right. Cool.
All right, man,
good.
that's all I got.
And then so absolutely. Well, thanks for the update on the macro stuff. Always, in the stock market is really interesting. That'll be playing out over the next couple months. There's always a rocky period in kind of October, November for the stock market. So we'll see how bad it gets this time with the little pullback.
Yeah, absolutely.
But so, just one last thing. One of our kind of longtime members posted a little, just a commentary about the Bitcoin and cryptocurrency markets in our Slack channel recently. Actually, it was just a couple hours ago. Mm-hmm. Just kind of, feel a little down. He was like, man, the price is pretty stable. There's a bunch of altcoins that are funded by corporate interests that have bank interests that have this massive advantage over Bitcoin right now. And, that all that's true. I mean, if we're looking at the glass is half empty, that's right. I mean, there are definitely some negatives, and there's some things that Bitcoin remains disadvantaged at. But overall, I mean, generally speaking, Bitcoin is in the best position it's been fundamentally, economically, monetarily. I mean, that it's ever been, in my opinion. I mean, it's so solid. The stability is good. It might be boring and kind of depressing for traders, but it's good. It's good for perception, especially when there's a lot of crazy stuff going on in the world. It's good for security. It's good for companies as far as being able to project profitability. The SegWit stuff, the slow kind of
Yeah.
The deliberate and disciplined testing of code and rolling it out in a scheduled way. I mean, all this is just so fantastic. So yeah, I mean, there's two sides to every coin, and not Bitcoin, certainly not perfect. There's a lot of things we can complain about. Monero, you know, anonymity and fungibility being one. That's why we like Monero so much. But overall, Bitcoin is extremely healthy. So it's absolutely nothing to be depressed about. I think we're right on track. It's just, you know, it might not happen as fast as a lot of us wanted to, and that's been the case for many years. But we're right on track. There's no worries.
Yeah, absolutely. If I had to, you know, obviously this is a kind of a dumb statement, really, but if I had to choose any train to be on, it's Bitcoin's, based on just its longevity, its history, the meticulousness, and just really, like, I mean, having patience is key for this. And man, it's tough. It's tough when you see your competitors succeed and you so badly want to succeed. But again, I do think just give it time. These things will shake out the way that we anticipate.
That's it. And in fact, there's a term for what you described in economics, and it's low time preference. So there's high time preference and low time preference. And if you have a low time preference, that means time is not that important to you. Like in your equation of how you determine the economics of your life, or whatever your economics are. So, you know, if you have a low time, Bitcoiners tend to be low time preference people, and low time preference is very good for this kind of thing. That,
if we're building a financial system, if we're building a financial system on this protocol, it has to be low time preference. I mean, when
high time preference leads to Ethereum hard fork. That's
Yep, exactly.
That's it.
No, it's good. I couldn't have said it better myself. Good stuff, man.
Right on. Cool, Rich. Well, it's great to catch up finally after a month. I mean,
it's been a while, but vacation, you know, becomes really important.
Yeah, especially in July.
Yeah, absolutely.
So anyway, have a good weekend, and we'll catch up in a couple weeks.
All right, you too. Sounds good, brother. Take it easy.
Right. You too. Cheers, Rich.